big driver for SoftBank is understanding the value of the assets. We think they have around 29 trillion yen in assets. And even when you take out the debt and you discount that, that's 20 trillion. The market cap is 13 now. So there's a very big gap. And a lot of it is about understanding what they actually own. So the current environment where everyone's having to change their behavior, use a lot more digital services, that's certainly bringing more of their assets into the limelight. We're seeing companies like Coupang in Korea doing extremely well, food delivery, DoorDash, all these names becoming much bigger brands, a much bigger part of our lives, and people are going to figure out that SoftBank owns those and be ascribing more value to them. That's the key thing going forward.
There are several companies in the Vision Fund, though, specifically that are tied to areas of the sharing economy that may not benefit as much coming out of this COVID era. So does that concern you?
I think there'll be some companies which will suffer. We have to remember that the Vision Fund still has a lot of capital left to deploy. So if you have an industry which is struggling, like the travel industry or hospitality right now, SoftBank certainly have the money to consolidate that industry if things are going to rebound, say, in a couple of years. Now could actually be a good time for them to invest more in those Vision Fund companies to allow consolidation. It doesn't sound they're being that aggressive, though. The key message yesterday was more about playing defense, but they're certainly well enough capitalized to deal with the situation.
And just looking at the stock price reaction, I mean, I understand you have a buy rating on the shares, and the results, given that they were pretty good, what do you make of this move to the downside?
Well, obviously shares have done very well. I think there was a bit of surprise about investment management company that was mentioned yesterday and how they would be investing some of their treasury cash in listed investments. That may have raised a few questions, but I think it's still a very cheap stock, and we think it's a buy here.
And you also believe that they'll continue to run their buyback program for a few more months?
Right. They still have a very long way to go in terms of buying back shares. That should be a positive, and also reducing their debt. And we think once investors do the calculations there, they'll realize that there's still a very big discount to their net assets and is a very attractive valuation still here.